Investing in cryptocurrency can be an exciting but risky endeavor. If you're thinking about investing in crypto, here's a step-by-step guide to help you get started. First, understand the basics. Before you jump in, it's important to understand what cryptocurrency is and how it works. Cryptocurrencies are decentralized digital currencies that use blockchain technology. Popular examples include Bitcoin, Ethereum, and many others. Blockchain is a decentralized, distributed ledger that records transactions across many computers. A crypto wallet is a digital tool used to store and manage your crypto assets. Exchanges are online platforms where you can buy, sell, and trade cryptocurrencies. Next, decide how much to invest. Cryptocurrency is volatile, meaning prices can fluctuate drastically in short periods. It's essential to invest only what you can afford to lose. Diversify your portfolio. Don't put all your funds into one coin. Set a clear budget or investment strategy. Now choose a cryptocurrency exchange. You'll need an exchange to buy and sell cryptocurrencies. Some popular exchanges include Coinbase, which is great for beginners with a user-friendly interface, Binance, offering a wide range of coins and trading pairs, Kraken, known for its security features and lower fees, and Gemini, which offers strong regulatory compliance and security. When choosing an exchange, consider the fees, including trading fees and withdrawal fees. Look at the security measures like two-factor authentication and cold storage for assets. Check which cryptocurrencies are supported and the available payment methods such as bank transfers and credit cards. Create an account and verify your identity. Once you've chosen an exchange, you'll need to create an account by providing your email and creating a password. Then, complete identity verification, often called the KYC process, by submitting personal information like your ID and proof of address. Deposit funds into your account. After creating your account, you'll need to deposit funds. Most exchanges accept bank transfers such as ACH or wire transfer, credit or debit cards, although these usually come with higher fees. And stablecoins like USDT or other cryptocurrencies if you're transferring from another wallet. Choose cryptocurrencies to invest in. There are thousands of cryptocurrencies, but most people start with popular ones like Bitcoin, often referred to as the king of crypto. Ethereum, known for smart contracts and decentralized applications, or dApps. Binance Coin, used primarily on the Binance platform. Other popular alternatives include Solana, Cardano, and Polkadot. It's recommended to do thorough research, often abbreviated as DIE, or do your own research on each project, as crypto markets can be highly speculative. Place your first order. Once your account is funded, you can place an order. There are typically two main types of orders: market order, where you buy at the current market price, and limit order, where you set a price at which you're willing to buy or sell, and the exchange executes the order when the price reaches your limit. Store your cryptocurrency safely. Storing your crypto securely is crucial. There are hot wallets, which are software wallets like MetaMask or Trust Wallet. These are online and more convenient but less secure. Then there are cold wallets, such as hardware wallets like Ledger or Trezor. These store your assets offline and are more secure. Some exchanges also provide custodial services, meaning they hold your crypto for you, but this can be riskier due to potential hacks. Monitor your investment. Keep an eye on your crypto investments, but try to avoid emotional trading. Cryptocurrency markets can be very volatile, so prices can fluctuate dramatically. It's helpful to have an investment strategy, whether it's long-term holding, also known as hodling, swing trading, or something else. You can track prices and news with apps like CoinGecko, CoinMarketCap, or Blockfolio. Know the tax implications. Cryptocurrencies are subject to taxes in many countries, and tax laws can be complex. Generally, profits from trading or selling crypto are subject to capital gains tax. Some key points: record all transactions. You need a detailed history of all your crypto trades. Report earnings. Pay taxes on profits, both short-term and long-term gains. It's a good idea to consult a tax professional for advice specific to your country or region. Stay informed. The cryptocurrency space is constantly evolving. New projects, updates, and regulations are emerging regularly. Keeping up with the news, following reputable crypto influencers, and joining communities like Reddit or Twitter can help you stay updated. Key risks to be aware of: volatility. Prices can swing dramatically in a short period. Security. There have been instances of exchanges getting hacked or people losing access to their wallets. Scams are. Be cautious of too good to be true investment opportunities, Ponzi schemes, or phishing attempts. Regulation. Some governments may impose regulations that could impact the value or legality of cryptocurrencies. Final thoughts. Investing in crypto can offer high returns, but it comes with significant risks. Start small, educate yourself, and take a cautious approach. Over time, you can refine your strategy as you gain more experience. Would you like to dive deeper into any of these steps, or perhaps want more information on specific coins or wallets? Stay tuned for more updates.